I think folks might not know, like I told you, it was almost 4 or 5 years since we launched XSGD.
Right.
And close to 8 billion XSGD have been transacted on chain, right? And these are data that you can see publicly.
Right.
You can't hide it, nor can you actually mask it up. These are real transactions that people have to start using this. It's beyond our thought initially, is how this has come along, right? And more importantly, it gives us the confidence that this is going to be a regulated industry. This is going to be something that is the right step in the direction as a payment infrastructure for this part of the world and potentially the future itself, right? And beyond the Sing dollars, the licenses also means to say that we're not just talking about Sing dollar stablecoin or Rupiah stablecoin, which is XIDR, which launched about 2 years ago. We are able now to be able to issue G10 currency stablecoin out of Singapore with this new license regime. And XUSD, which is what we're going to be focusing our efforts on in the coming years, we think we can actually do something that is going to be even more mainstream. And that's what we're discussing with Alipay and Grab and Group, right? Hopefully, that's the next generation of solution that we want to support them, specifically in cross-border payment. We want to be able to enable Grab or Alipay and Alipay Plus users. When they come to Singapore, simply scan a SG QR code, scan a Grab QR, and just make payment. Right? And to them, no blockchain is involved. What is PBM? None of that happens. All they need to know is they scan the QR code, enter the Sing dollar value that the cashier tells them to enter, they make payment. But at the back end of it, this is where the blockchain and the settlement side can really comes in, right? We can think about how to make this purpose-bound money more purposeful and compliant by design, that it can only be used to make for goods and services. So the AML risk, the compliance risk can be ring-fenced and properly controlled. And then the settlement will be able to be instantaneous. And then the FX capability of the blockchain that we have been promised about, everyone keep talking about it, can then be actually happening at the micro transaction level. And that's what we're hoping to get this done this year itself. There's so many things you can do, but in that order, right? It must be first be able to increase their acceptance, make sure that it's as seamless as possible without drop-off rate. Then you go into our cost. Can I make sure my cost is as low as possible, especially for cross-border, which is there's still a lot of areas to be solved. Then the innovation, which is pre-game for a lot of guys to come in.
Hi folks, welcome back to On Call with Insignia, where we go on call with leaders innovating the future of Southeast Asia's digital economy, or as we like to call it, ASEAN Innovation. I'm your host, Paolo Aquino, and welcome back to season 6 of the show. If you're tuning in, this should be the 3rd episode of a new year of conversations with founders and leaders. For those who have been longtime listeners, thanks for tuning in, and I hope you to continue having your support for the coming episodes. We definitely have a jam-packed lineup of guests coming out, but for this episode, we have a returning guest actually. For longtime listeners, you probably remember the person here in the video with me. He's none other than Tianwei Liu, who's the Deputy Group CEO of Fazz, a regional fintech that's focusing a lot on developing fintech infrastructure, also doing a lot for rural Indonesia as well, with one of the largest agent networks providing financial services there in rural Indonesia as well. So from our last conversation with Fazz was actually with Tianwei also back in 2021 or 2022. So it's been a while. At that time, we did talk a lot about the merger between the partnering together between XFers and PayFazz into Fazz Group. We also talked about blockchain, a lot of the excitement around that at the time. And I think for Fazz, that has definitely been a continued initiative. And we'll talk a little bit more about the more recent news. And I think it's definitely a good time to really showcase a lot of catch up and then showcase a lot of what Fazz and particularly StraitsX has been up to recently. So before I get into the news, I just wanted to check in with Tianwei. How are you doing? It's been a while.
Hey, hi everyone. My name is Tianwei, and thank you, Paolo and Insignia, for having me here again today. It's been quite a while. I didn't know it's almost been 2 years since we last chatted. And congratulations, it's season 6 already. Wow. And quite a bit of things have been happening. I think sometimes time flies and we just really get very busy. Thank you for having me back again here. At the start of the new year, we're excited and there's a lot more things to do this year as well.
Yeah, we definitely had the pleasure of really documenting Fazz's journey from the very beginning. I think you can pretty much write a whole, biography of Fazz at this point. But the story is far from over, right?
Yeah, there's going to be a lot of war story to talk about one day. But we just document it first. Yeah.
Exactly. And speaking of stories, I think the latest chapter has been, recently in SFF, Singapore Fintech Festival, Ravi Menon, MD for MAS, announced, among other things, that StraitsX is one of those that have received an in-principle approval for the issuance of 2 digital currencies, XSGD and XUSD under the MAS's new regulatory framework around stablecoins. This has been covered on the news a lot, but I wanted to take this opportunity to actually ask you, Tianwei, what does this mean, or what are the implications? First, for StraitsX and Fazz as a fintech group.
Yeah, we're deeply honored. I think this is one of the major milestones that we have been working very hard on. The stablecoin project, the entire StraitsX started as a side project, a passion project for a lot of us, and at Fazz, it's about almost 4 years, because people don't really know. We started Project StraitsX maybe sometime in 2019 itself. StraitsX have always been just part of XSGD, which is the original company that merged into Fazz, which I was founded, and it's always part of Fazz. It's just a product line that we decided to call it StraitsX because we want to clearly differentiate some of the offering to our client itself. And from that to this day, very honored to be among the first to be acknowledged by MAS to comply with the upcoming stablecoin regulation. I think it's a huge shout out and milestone and achievement to the team and everyone that has been involved, right? And it has been a great relationship that we have with the regulators, with MAS, working every step of the way, right? Because I still remember the days in 2019 when I first reach out to the MAS folks and tell them that we have a need for stablecoin, and we think that this is an industry that's interesting. We have passion about it. We want to build it. And I still remember that coffee conversation that they're like, that's where I really give kudos to regulators in Singapore and MAS. To be very frank, we do not understand enough of this infant field, which no one should be able to say, even today. If anyone tell you they're experts, and I never want to say that I'm an expert, I'm just a student of this whole thing, we're really at the bleeding edge here. And they are first to admit that they don't understand enough, but they will be giving the honor to have them to give us a trust that they allow us to proceed then based on our existing license regime of e-money, right? Because we have an e-money license under Fazz in Singapore through XFirst. And that's how we launched the Stablecoin project in 2019. From that on, with multiple iterations, to get into this stage, and then there was a launch of Payment Service Act. There was a MPI license given to us for DPT, which is supposed to be really where it is for transacting of this kind of assets. To the day that just in the day that we are going to be granted in principle approval for early compliance for the upcoming stablecoin regime framework, which we have contributed quite a bit with MAS on, right? Because it underscores the strong reputation and responsibility I always feel that MAS sees in us to basically be the digital asset provider for this. And also attestation to our track record, right? I think folks might not know, I told you, it was almost 4 or 5 years since we launched XSGD. Right. And close to 8 billion XSGD has been transacted on chain, right? And these are data that you can see publicly. Right. You can't hide it, nor can you actually mask it up. These are real transactions that people have to start using this. It's beyond our thought initially, is how this has come along, right? And more importantly, it gives us the confidence that this is going to be a regulated industry. This is going to be something that in the right step in the direction as the payment infrastructure for this part of the world and potentially the future itself, right? And beyond the Sing dollars, the licenses also means to say that we're not just talking about Sing dollar stablecoin or Rupiah stablecoin, which is XIDR, which launched about 2 years ago. We are able now to be able to issue G10 currency stablecoin out of Singapore with this new license regime. And XUSD, which is what we're going to be focusing our efforts on in the coming years, we'll be launching soon under the same regime, which is super exciting for us as a company to be able to do more.
And I think one key takeaway from this whole story is that, especially for those who are not as familiar with Fazz's story and StraitsX's story, this didn't really just come out of the blue. I really appreciate how you just lined up all those different licenses and regulatory milestones that you achieved prior to actually even getting this IPA, and how, because it's still an IPA for an upcoming framework, there's still a lot more work to be done, as you mentioned. That leads me into the next question on the implications, right? So what does this now mean for the region? Obviously, it could be still too early to say, but like, how has this fired up the team and fired you up for what's ahead?
I think it's just the first huge step on this itself is the recognition of being a fully regulated, transparent, and a trusted stablecoin issuer out of Singapore, right? I think that we have been working on this journey for the last 4, 5, 6 years, right? Yeah. And you can see how the industry sentiments have changed, right? The next big step, which is just done with some of the things that MAS announced, is that these are things that industrial forerunner, idea guys, and people like me just say. But getting MAS, such a reputable regulatory agency, to actually put their stamp on this, say that they also see the same future in the use cases of this, is definitely great for the industry as a whole, right? And Singapore being a beacon, at least in this part of the world, from a regulation perspective, helps to drive and makes more regulators take a more interesting look at this. And with this, it means to say the banks, a major financial institution, will be able to then have their compliance framework take on this in a much more acceptable way, right? Because
Mhm.
they being a lot of time, it's not that I've been knowing a lot of banks folks and now they become great friends over the years, is that it's not that they are not supporting innovation. Regulation must catch up because they are ultimately prudent custody of the funds of their clients. They have to do things the compliance way. We are at the forefront. We can't do illegal stuff as well, but they have a lower risk appetite compared to us in terms of the ability to innovate on those some things. And that's where a regulation that is very clear that this is going to be something that's going to be more mainstream will help potentially be the catalyst that will push this thing over to the next tipping point where more adoption can happen, right? It brings about the credibility that using this kind of medium to facilitate innovation in payment is the way that regulators around the world should be looking at this, both domestically and especially from cross-border payment. And then it allows service provider like us and other players to be able to confidently say that what they are doing is regulated and they are doing this according to the standards needed, both on the AML control side of this thing, nor on the custody and the way that they safeguard the user's funds. Before that, it's a wild west and it's self-regulated. At least now there is a very clear regime that we can point to from a reputable financial agency or that is regulating this to tell you that, hey, this is the best practice and this is the expectation. And if you actually stick to this and actually get the licenses itself, this is what it means, right? I think I had some conversation with MAS when early days that what they were looking on is to basically put on the gold sticker to tell people that this is what they envision a good regulated stablecoin will be used for payment in the future itself. They want to give that stamp of approval to let everyone else know the differentiation. Because even in this world, stablecoin, the market cap is 130 billion as of yet. There are many stablecoin issuers out there, right? And everybody will tell you that they're compliant. Everybody will tell you they're going to be safe. They're great, everything, right? What they're hoping to actually achieve in some of this licensing is really just give you a gold sticker and let the consumer and let the financial institution know that this is going to be the run recognized so that you can, again, you have to practice your own risk assessment still, right? But at least this is more or less told you that there's a certain bar that has been achieved by using certain products.
Yeah, I think really setting the bar and really setting the standards is important. Obviously, I think sometimes it can be hard to understand from a short-term perspective, but really looking at it long-term, regulation does need to come in and does have to catch up at some point, and it's good to see that momentum happening for especially for StraitsX. I wanted for you to also maybe paint a picture for us what this means for the merchants that you guys work with. You earlier mentioned that 8 billion transactions already since 2021 with XSGD. Maybe you can paint a picture of what this means on the ground for customers and maybe lead in also to the next topic of our conversation, which is some of the collaborations that you're doing with Ant Group and Grab and supporting cross-border payments with XSGD.
I think I probably shared this publicly a few times, maybe just really rewind things back a bit. I think when we started this project in 2019 itself, there was a few things that we have, few theses that we have, right? First and foremost, a lot of us here are a big believer. We think that we're engineers, technologies are hard, we're trying to here to solve problems, and we see that the blockchain solution does have its merit, and there are things that can be done that traditional centralized system cannot do. And that's why we have been very focused on telling people we are interested in the application side of this thing. Stablecoin, again, for the folks that doesn't know, I want to repeat again, stablecoin is stable. There's no speculative nature. You cannot buy this thing and hope that you're 10x. It doesn't work like that. So there's none of that. But at the same time, yeah, if you want to support this for sure, but you can't expect this to 10x over the next year unless Singapore is 10x, right? So that is a bit different, but the use cases here is more towards real world application. What problem can it solve that traditional centralized solution cannot do? And when we put on that hat itself, then we need to really start to compare and think about what is the trade-off here, right? Nothing comes for free, right? If you want centralization, I'm an engineer at heart. I always tell most of the guys, right? Centralization has been around for the last, I don't know how long, and most of the solution that we are used to doing, right? And you can't tell you that it doesn't work. It works very well. It works very efficiently, right? And if you are willing to give up on that and say you want to be decentralized, there are benefits, right? People participating, redundancy is higher, you don't have to trust anyone, but there's a trade-off. Trade-off is that it's going to be a lot more expensive to run and maintain, and then infrastructure is going to be expensive. There's a hurdle to overcome, right? Then we need to then focus on what are you trying to solve here, right? What does the benefit that it actually brings in, right? And if you look at how stablecoin has evolved over the last 5-6 years, our initial thesis when we first started that why we want to do this is that we saw that the potential around the programmability, the distributed nature of things and innovation can happen at a micro level. But we think that we have some of the elements for success. First and foremost, we think that we have ability to make this regulated because we are by then an MPR license holder. We have e-money license. We have run regulated business before. We think that we have potentially ability to make sure that first and foremost, this is not going to be illegal. We will not be shut down overnight. And I've been telling that to guys that that's super important for us, right? Compliance is always on the first on everyone's thought. Are we doing things the proper way, right? So the next thing, however, that we think that we will be successful is because of the payment infrastructure that we have gained over the last almost 10 years now, that we have built up from the ground up. Payment infrastructure to accept payment from the bank, VA solution, bank transfer capability. And to be honest, we didn't know the importance of that over the time. Actually, that is actually even more important than the first one. The first is being just compliance and regulated compliance, right? Because the actual fact is, it's actually pretty, a lot of companies will tell you they are regulators and they're compliance, but that does not immediately translate to banking relationship. It doesn't mean to say that, hey, I can form a trust company and launch a stablecoin and then expect that I'm going to get all the bank accounts to get all the rails and payment gateway that you have or integrate with all the partners that you have. That's a huge gap in between the two of them, right? So because we have those things, being a payment company was a key reason why we think that this thesis will work. But then the third piece of this thing, then our initial thought is ecosystem, right? You need an ecosystem to really make this thing, right? You have the solution, you have compliance. Who is going to use this thing, right? Our initial thought is that the Web3, the blockchain space, we serve that time, early days, as a payment gateway for a lot of these exchanges and fintech companies, right? And they probably want to use them, right? Which we were right. That's how actually the initial scale of XSGD actually came from, right? We have a lot of adoption from our Web3 clients. They were wanting to use this thing for a lot of innovation that we're dealing with. But I think we very soon, over the last few years, realized one thing, which is, yes, this is definitely a high growth segment of the economy. Things are moving. I'm very excited about what can happen over there. But at the same time, it's not mainstream enough, right? The size of the market, just looking at blockchain, Web3 companies, is not big enough. It is huge right now. It's already been like, I think it's almost a few $1 trillion market, but like it is not huge enough to really get to the mainstream. We really need to think about how to get this back to a consumer like my mom and dad to actually use this thing, which is some of the things I was talking about, right? The vision here is that we are focusing on this, making sure that the whole entire technology disappear behind the scene. The customers, they should be just taking out their phone and just click on a button and it works. Payments should work as payments, right? You just really just want to pay for that bill. You're not going to be asking the guy when I can use a crypto and all these things. It's just way too convenient. That will work for a certain portion of people. I believe 90% of most of the people just want to scan and pay and get out of the restaurant or whatever place they're at, right? And that's been the primary focus, and that's where things have been evolving over the last 2-3 years. And we're very excited to talk about some of the things we're doing with Andrew, with Grab. The folks that started last year, Grab made a major announcement that they are launching a Web3 wallet. I hope you have tried it out. That's working very closely with us, right? We're very honored to be able to partner with Grab on this thing as well. They actually spend a lot of time thinking about the user experience, right? Building up a so-called Web3 capability wallet within the Grab app so that a normal retail consumer that has a Grab and uses Grab can easily get access to Web3, right? They can create a non-custody wallet. For the folks that actually don't know, the Web3 wallet inside Grab is actually non-custody, but the technology just disappeared, right? People don't even know that. They just quickly click, answer a few questions. They have a Web3 wallet that can interact directly with the blockchain, right? You can send in NFT, which in the first iteration of it, we have worked with them on the purpose-bound money that allows people to have digital $1 voucher backed by XSGD, which is a stablecoin. And that's the only assets that you can now hold on a Web3 wallet. And we use it to showcase a voucher-based payment system, which follow on for the first year trial. Last year trial has covered about 200 merchants. You can buy these vouchers on Fazz, hold it and actually send it to a friend and actually make purchases of over 200 participating outlets. My favorite is Koi Bubble Tea. You can still do that today. You can use it to buy a physical merchant product. And the experience, of course, is still not as streamlined as we wanted it to be. But the end idea here is to the merchant, this is just Grab Pay. They don't even understand anything about blockchain or anything.
Like any other e-wallet.
Correct. Somebody just trying to use Grab to make payment, fine. And the teller instantaneously gives the feedback that, hey, $10 received. Just give them the bubble tea that they wanted. So that itself is a taste of the direction that we're heading in. And happy to share that it has pretty good reception across the merchants, and also the tech side is finally catching up. We think we can actually do something that is going to be even more mainstream. And that's what we're discussing with Alipay and Grab and Group, right? Hopefully that's the next generation of solution that we want to support them specifically in cross-border payment. We want to be able to enable Grab or Alipay and Alipay Plus users. When they come to Singapore, simply scan a SG QR code, scan a Grab QR, and just make payment, right? And to them, no blockchain is involved. What is PBM? None of that happens. All they need to know is they scan the QR code, enter the $6 value that the cashier tells them to enter, they make payment. But at the back end of it, this is where the blockchain and the settlement side can really comes in, right? We can think about how to make this purpose-bound money more purposeful and compliant by design, that it can only be used to make for goods and services. So the AML risk, the compliance risk can be ring-fenced and properly controlled. And then the settlement will be able to be instantaneous. And then the FX capability of the blockchain that we have been promised about, everyone keep talking about it, can then be actually happening at the micro transaction level. And that's what we're hoping to get this done this year itself.
Yeah, and I think really that atomic settlement, which has been I think one of the 5 sort of visions or goals of MAS as well for a long time now, is actually in the process of being done through this. And I think looking at it from a consumer side, as you mentioned, nothing should really be different. But at the same time, from the merchant side, with settlement especially and FX, as you mentioned, that is where a lot of the stark difference can be seen compared to, say, if you use, say, non-blockchain technologies.
And I think that's key. I think the whole idea here, if we were successful, neither the merchant or the consumer will know anything about blockchain. That is actually the true end goal here. They just need to know that suddenly it's faster. And accessibility. I think the main problem is also accessibility, right? The Alipay user right now can just make payment at Grab merchants, and they scan and they pay and they're happy with the living of the goods. To the merchant, they don't have to onboard a new acquirer, right? They don't have to say, oh, I need to sign up with Alipay, or no, this is the Grab Pay. Somebody's making Grab Pay to me, I'm giving. I think that's the essence of it. And then with all the technology, the FX, the speedy settlements, all baked to the back end innovation side of this thing, is what we're trying to achieve. We will be successful and we'll be celebrating. If no one knows that is using blockchain or crypto or XSGD, they need to know, I'm scanning, I'm making payment, I move on with my life. And then that's the angle here.
I was curious to know what was the implication also for integrations as well, right? Especially now with a lot more e-commerce platforms or marketplaces wanting to integrate financial services into their, or even SaaS platforms as well, integrating financial services into their stack, right? What is the picture that you see for that, and in terms of what you guys are doing with XSGD and StraitsX?
I think from a commerce perspective, payment is a basic fundamental need, right? And if you are a commerce or a marketplace or e-commerce online, you want to have something that's as seamless and as easy for your customers as possible. For the local, when I first started the whole payment stuff, and then we are still looking at that right now, which is shopping cart abandonment, right? It's a big metric that everyone looks at, right? If the customers can't make the payment, they're about to buy something, they're frustrated with the payment, it lost all your so-called CAC, right? You want them to be able to clear. So that is always the top line is also more important, always more important than the cost that for most of these merchants out there. They just want a seamless experience. They want their customers to be happy, buy the product, and just move on, right? So that itself is where the last mile of this is where I talk about, right? The merchant do not want to onboard a new system. Give them something that the customers can just pay and move on. And that's something that we will need to first fundamentally focus our effort on solving, which I was just describing earlier on. After that, then it will come about the secondary stuff to think about. How about rewards point system, voucher point system, which is some of the stuff that we've been talking about from PBM perspective, ability to put in programmability that, hey, if you make this purchase, the next time you come back, this voucher automatically we can reapply for certain use cases. What if this voucher is now interoperable? You can use this voucher across multiple different platforms, right? And this voucher will just stay with you as long as you make the purchase. And no one have to spend too much time on the governance. The block contract will actually take care of the voucher governance by design. Those are the things that the next order of thinking will be about, right? Can I innovate around that thing? But even before that, if I really bring it out, that is the end game, right? But it started off with, can I increase the payment throughput, right? Can I make it sure that more people can make payment? Which is some of this thing that I just mirrored to you. Like the Ali guys will be thinking, can I make my Alipay people be accepted at more places? But the alternative for the merchant in your case is that, can I have set more payments for my client without having to do any work, right? I just want more people to make payment for me, right? So at the restaurant that's supported by Grab right now that previously does not accept Alipay, another new payment method, but without doing any work, because it's still a Grab merchant, it's still a Grab Pay, and I just expanded my customer payment option. So that's the first priority. The next priority that we're thinking then is the cost. Is this expensive? How much more do I have to pay for this? And if it's something that is acceptable and they help me reduce my cost, great, that's something I want to use. Then you think about the final order is, okay, what kind of innovation can you now do, right? Can I get the customers to convert, come back again. Is that kind of voucher system that I can think of them that after this purchase will come back? That's how they will probably think of their tier or ranking. And I think we are now primarily focused on the first two first, where I think that there's a lot of space to innovate for the third piece, right? With the programmable nature. And that's the great news about, I talk about decentralization as an advantage and programmability, right? This is something that a lot of startups, I think, in the next generation can be created to think about innovation they can do around that space. That previously there's a wall garden, right? It's all locked up. GrabPay is great. I love using it. But then if I want to do something with GrabPay, I need to be figuring out how to negotiate with them, get their API and everything. Now you can, as a startup, just innovate around that space and do something interesting when this infrastructure is over there.
Yeah, so throughput and the cost aspects first, and then it really opens things up for the application side. We could just go on talking about all these other programmable stuff. I think even like things that's more complicated, like insurance or all those other.
Oh yeah, invoice financing. So many areas I can do right now. Can you imagine that now you're marketplace sellers and you have this amount of invoice and you can see the transaction coming in? I can give you a line of credit because the data is available. I can even collateralize some of these things on the smart contract. There's so many things you can do, but in that order, right? It must be first be able to increase their acceptance, make sure that it's as seamless as possible without drop-off rate. Then you go into our cost. Can I make sure my cost is as low as possible, especially for cross-border, which is there's still a lot of area to be solved. Then the innovation, which is pre-game for a lot of guys to come in.
Thank you for joining us on this call. Make sure you get notified on when to dial in by following us wherever you're listening to us. If you're on YouTube, hit that subscribe button, toss in a like, and let us know if you'd like to hear more of this topic in the comments. See you all in our next call.